This next question here is what happens when there is a regional DAO operating in a specific geographical region and then geopolitical factors affect their performance for XYZ reasons? That is a great question, and I don't think I've got a great answer for it at this point. And that's not to cause wide scale panic. I think it's um, that we are by nature investing in assets all around the world, and we can't predict, the geographical complexities in which those projects may be located. So what we do on the front end, we've got a team of us that work on vetting projects, and that vetting process does all of the usual stuff. So what are the financial projections of the investment? Is it really going to create a good ROI for us? What's the team? What's the operational team like? We go through all of the various factors. Are they qualified? Have they got the skill set, the experience? Have they got the backgrounds that are required for the particular asset class in which they're working? We then get professionals that, we are not a mining company, we are not a timber company. So we've got a number of people that work with us as part of the DAO that then provide their expertise to vet on those backgrounds. So we've got one of the world's best mining specialists that we draw on for looking at from the very basic of is this concession and location something that has got any geographical factors that would impede us being able to get the asset out of that particular area, things like that. So just across the board, we get all of the specialist advice that we need on that aspect, on the different aspects of any project to come to a basic conclusion. But also we do then a risk profiling of the particular country, and that involves things from checking out the underlying economics, the inflation rates in the country, withholding taxes, the strength and resilience of the banking system to be able to actually pull funds out of the country. And we basically come up with an overall risk scoring and risk profiling on that particular asset. And then as a team, we make a decision with all of that information gathered. And we'll also do a site visit, which allows us to see, eyes on, is the asset actually there, making sure that we've done our due diligence on the basic 101s. And all of that process goes right before we send any money. And any money that's invested into a particular asset is also done on a tranche basis against milestones. So we're not making a decision, say, to put $1 million into a particular asset and giving them $1 million. It might be just 100,000 up front to get to milestone number one. And that's kind of our preferred process of how we build out investments into regional DAOs. The geographical factors after that in some of the places that we do work are very real risks that we're managing and working to mitigate. And so if I can talk about Micah's work this year in Nepal, he spent a significant amount of time laying the relational rails down for working in that country, not just with the current administration, but also the opposition. So that once we've actually signed a deal and we're working under one particular administration's green lights, if there's a change of government, we've also got the relational depth on the other side of the equation so that we can continue, because those relationships are important. And spending time on those things might sound overly cautious, but they pay. And so I think, we've spoken here before in the situation of Zambia, spending time eating a goat with a local chief might seem like a waste of time, but when that chief has got the chop that allows you to operate your projects on his land, and had you not eaten that goat, those chops would not have been given. There may have been some luck and some happenstance in that, but it's also important to pay attention to that level of unknown risk by just spending time and asking questions in each local environment that we work. So it's a big wide world. There's a lot of risk in different ways, and we are no way professionals or experts in all of that, but we do draw on the expertise of others to make sure that we are minimizing and mitigating all of the risk that comes with these types of projects we invest in. So that's how we approach that. Hopefully that answers the question.
Yeah, and I will just add something. In fact, I think this is Sam's answer, if I'm not mistaken. Great answer. Whenever investors ask us about geopolitical risk, we don't face any extra geopolitical risk that a traditional investor using fiat wouldn't face. The fact that we're a crypto company or a blockchain company does not add any layers of geopolitical risk. so essentially, if we were just a traditional venture capitalist fund that were going into Zambia or Nepal or Malaysia to look for investment, we'd face the same exact geopolitical risks. So the fact that Kula is what it is doesn't add risk, but like Chris is saying, we have as many layers as possible to mitigate that risk.
Yeah, if I can speak to that a little bit, is
Absolutely.
one, is that's a benefit of diversification, is you don't just sit in one geographic area and then hope for the best in that one. Two is, if anything, we actually have lower risk because we use blockchain, we bring in transparency in this opaque market that's traditionally true. And secondly is I really enjoy those questions about diversification and regional DAOs and all that. One is, we don't diversify just for the sake of diversification, even though like maybe in the efficient market theory, there's all these frontier you can do on the equity market to serve that diversification. But there has to be a theme in which we kind of move along for the diversification. So you look at, for example, a BRKA or BRKB, like Warren Buffett stuff, right? I mean, the theme is value investment. He's able to find stuff on the cheap and wait for it to go up in value and sell it. You look at Google, right? The theme is search, but then along that theme, you're bringing all kinds of stuff. If you look at OpenAI nowadays, it's all like about Gen AI and the revenue sources that bring along with that. So for us, it's really about impact. And furthermore, it's about quantifiable impact, including ESG theme that we focus on. And we are in the process of having the ability to quantify those impact, serving community all the way to be able to have carbon credit tokenized. So, and also thinking like the exit of some of these regional DAOs, we got to have liquidity on the other end. So be able to have the ESG theme really helps us in that regard. Secondly, there's kind of this synergy across different rDAOs and regional DAOs is that, just a simple example is if we know how to value the real asset in one, can we apply that knowledge into valuing the same class of asset, but in different area? And I think the answer is yes. And we are making great progress in doing that, creating models for that. So that's like kind of a thing about all the other questions. I was taking notes. I thought it was really cool questions. Let's see, this next question. I've read somewhere that Kula enhanced security by creating direct blockchain access. Your phone becomes a node. What does it mean? Also, does Kula have a plan to have its own chain in the future? Yes, we will. We will probably need to have our own chain at some point. The IoT and DePIN wave is definitely coming. So Internet of Things, right? These are little sensors that we can place everywhere. DePIN will be like a decentralized physical infrastructure network. It's like basically IoT, but decentralized. We are like I guess we started a conversation with some companies that operate blockchain in that regard, like edge compute, and be able to provide a chain that can help us with that. Kind of depends on the fee structure and the customization of those things. And later on, like maybe, if we can save costs for regional DAOs or token holders, or we can have a way to gather these data more easily, then we will definitely consider our own chain.
Great. I've got a question here that was came across X yesterday, actually, when our AMA announcement went out. And there may be questions on X. I'm not sure if our marketing team want to post those in here, but this one came yesterday on our comment section. How does the platform ensure that local communities directly benefit from the investments? Some specific examples or case studies might be helpful. And kudos for the amazing initiative, they say.
Yeah, so the benefit, I guess there are different layers, to the benefit. One is like money, basically, right? Like the capital appreciation of these assets that people sit on that traditionally they were never able to get to. And two is really the benefit in that the participants finally have a way to voice their opinion and realize the self-worth. But that's a different, I think that's like a higher level and something that I think Chris is really good at speaking to. And for me, I'll just take the lower ground, money, right? So if you have a regional DAO treasury, and because the community gets 20% of the regional DAO token, they will be able to claim that part of that treasury, right? As the tokenized asset is being realized its full value. So good thing that these communities have access to these raw material, many times underground, in the form that's not purified just yet. They keep the upside to that value. So when these assets are being verified and purified along the way, the value increases, so does that treasury value, therefore their token value will increase. So that's one way they can tap into that capital gain. So that's kind of cool. And for the impact side, if we get to quantify that and be able to bring it into the token, then that will be another value add to their token.
I would also add it even at a basic level, Sam, the just solid jobs in communities that are giving a solid remuneration rate at a healthy market rate for people's employment in the different companies that are established on the back of the asset development that we're investing into. It immediately creates impact, right? Because a lot of the places in which we are making investments, there isn't necessarily the industrial ecosystem right there in those sites. So people, making a good and fair wage is huge because there's dignity in that too, right? And that's also that's a really big win. And I think we've seen that immediately. And to be fair, we backed into the Zambia opportunity that we did a proof of concept with. But again, just the investment that we've given has allowed for that continued payroll and that investment into community just residually over time creates a sustained level of not just people surviving, but starting to begin to thrive. And then also in that particular community, they've made specific choices about their remuneration rates and pay parity, which have been really concrete case studies, which we didn't necessarily even think about, but they're really kind of almost happy outcomes of which we didn't anticipate fully up front. And I think, the longer side, and I'm going to go to the higher level that Sam was talking about on the more utopian, wonderful outcome of ideals is, for the first time, we actually are able to create a system that can put the wealth that people live on or around into a wallet that they have on their phone. And that's a win. This last 6 months, we've been able to figure out how we KYC and make sure that AML provisions are in place around that, so that it's completely legal and that's not doing something that we're either non-compliant in or doing something illegal either. But that essentially starts to bring financial inclusion to people that are otherwise financially excluded. And the third piece of that process is we've got a couple of options which we haven't fully pressed out because it follows sequentially after we've launched the project, but where we can either put actual debit cards into people's hands based on that wallet, and or a clear off ramp from that wallet into local currency in their local bank account or cooperative or collective bank account, means that we're now creating solidified and concentrated wealth in a community that isn't immediately exported to, I don't know, Barclays in central London or another, institutional bank somewhere around the planet and the financial hubs. And so that really excites me about creating wealth that stays in communities at that level and the catalyzation of new microeconomic opportunity for those communities too. And I think that's really the heart of our why as a project and why we do what we do and what we're looking forward to seeing as we launch. Yes, we capitalize, yes, we get more projects going, but fundamentally we're changing the status quo and allowing for that equitable distribution of wealth across the board, which is really what we're about and what we're excited to see at scale in the various different places. We already have got projects, but on a much more global scale and macro scale as well.
Excellent. Well, the next question, with regards to quantifying impact on carbon credit, can you comment on the recent article regarding Flow's failure in tokenizing carbon credit? How are you thinking about doing that successfully?
I can try to speak to that.
Absolutely.
So the carbon credit market has basically two, like in a way, like exits, right? One is called a voluntary market. One is more of a regulated market. So the voluntary market carbon credit is usually very, very low. And it's like a lot lower. We're talking about 10x many times, or 100x even, compared to the market that's being regulated and standardized. For Flow Carbon, they had this inroad into voluntary carbon market, which was facing a lot of scrutiny because of the quality of the carbon credit that's listed there. It really wasn't meeting the standard. So for us, we are not looking at voluntary carbon credit market. That just simply doesn't, it's like illiquid and it's really not worth the effort of doing that. Then you look at the regulated kind of market route. So the way that it's being regulated and be able to provide the quality is through these registry. There are different few companies and they have few standard, including something called a gold standard. You would think it's for gold, but it's not, it's for carbon credit. So and under those standards, they really have a ranking of these different carbon credits and where they come from and how do you quantify them. And make sure these credits have not been retired already and then tokenized. Obviously, it doesn't make sense. It's like, why would you can't make money twice on the same thing that's already being sold, right? So that's another thing that Flow Carbon did. But for us, we're never going to look at retired credits, right? And then we will be looking at credits that are of high quality. So that has to do with some of these network that we've built, our partners that we really appreciate of having, is the ability to generate resources that warrant these high quality carbon credit that will pass these registry, the standards within those registry. Now, of course, once we get like, big enough, we can have our own standard, but that will be like way down the line. Right now, we work into the system, provide the highest carbon credit that we can find, and go through the regulatory framework and be able to be listed on those standard, like a regulated carbon credit market. So that's kind of our approach.
Excellent. Yeah, great answer. And the next one, can't the community host an activity contest for the users to engage in, at least to keep the community active? Great question. We don't have any of our marketing people on the AMA this time, so I can speak to this a little bit. We've been, I guess, a little cautious to really, I know this sounds bad, but to really engage the community, to create excitement, create hype. And the reasoning really comes down to the way we're building this thing. We are setting out to be really the first, from what we know, the first licensed token, regulated token. And so therefore, we're waiting on a regulatory authority to give us that green light. And we're already way past the deadline that we were originally given to have had that response, that answer. So if I were to say on a scale of 1 to 100, how hard we're hitting marketing, we're probably about 40% gas pedal down. We are engaging in marketing to just continue to get our name out there, but to elicit a whole lot of excitement and hype, we're not a meme coin. We're not an overnight kind of pump and dump token. We're really focusing on building a substantial treasury because that's what's going to make this token do really well. So while we're about 40% gas on the or 40% strong marketing right now, we're really putting a lot of our effort and money into building this project and really substantiating our treasury, making our treasury, signing contracts, negotiating MOUs, etc. When we get that final green light and that our licenses in place, expect us to go 100% in the marketing. We're going to really engage the community. That's when we want that excitement. The last thing we want to do is get the community active, excited, hyped up, and then have to delay due to these government organizations that basically decide on their timetable when they want to respond. So that's probably why we don't have nearly as many of these contests and community engagements that other tokens do. One, because we're so focused on just building a solid project that regardless of contests, people are going to want to invest into. People are going to want to interact with our community, especially after launch. But right now, the stage that we're at in the marketing is still, believe it or not, it's still a little early. So once we get these final decisions from our regulatory authorities, expect us to go full out when it comes to marketing, and then you'll probably see a lot more of those contests and a lot more community engagements and so forth that you might see in other tokens. Looks like, unless I'm not sure if we've got anything from X, but that looks like all of our questions, gents. So thanks again for attending another AMA, the 26th AMA, and we look forward to our next one, the 27th in November. Frankly, we'll be on election day for the US, which will be an interesting day. But thanks again for everybody attending, and we look forward to next month. So have a wonderful October.
Bye-bye.